Right, I want to talk about the metals, gold and silver, but a lot of this is going to be driven by the currencies. So we're going to go over those first. Um, the dollar topped right exactly where it should have topped, right where I was expecting it to top at this resistance zone, major resistance zone right here. Um, the there's a couple of triggers that are probably going to um, create a bounce and maybe the next intermediate cycle low. So this should be an intermediate degree top, which means we're likely to uh, get a daily cycle low here pretty soon, then another bounce, like another attempt to test this again, and then roll over and get our final intermediate cycle low, that ABC pattern that I've noted several times in the past. So let me zoom in a little bit. All right, the November FOMC meeting is on the 3rd. It looks like, well, I'm pretty much convinced the dollar's moving down into a minor daily cycle low, a lower degree correction. The trigger event for that to bottom is probably out here on the FOMC meeting November 3rd. And I don't expect they're going to taper, but I think they'll talk a big game about tapering at that meeting. So what I expect to happen is we get a bounce out of the daily cycle low, something that looks pretty convincing, probably pushes the RSI back up to overbought. Let me put the RSI in here real quick. All right. So this will be one clue. If we do continue down into that FOMC meeting on the 3rd, then the RSI is going to start to get, well, it's going to start to embed in the overbought condition, and that's one of the tells that you are entering, or price is entering, an intermediate degree correction. So, like I said, at that point, I think on the FOMC meeting we get a bounce. RSI probably comes back up to tag this overbought condition, but I think the market at this point, the market's going to need more than just talk. They're going to need it's going to need real action. So at that point, I think the dollar rolls over again and then comes back down and makes a lower low. So something that probably looks like this. Now there'll be some bounces along the way. It's not going to be a straight line down, but more or less. And I'm not saying that this is where we're going to bottom. I don't know exactly where it's going to bottom. I'm just trying to give you an idea of trajectory. So at the meeting, then they talk tough about taper. That's enough to give us another bounce, but I don't think it'll break and make a new high. I think this will be a B wave bounce, and then we come down, and the next FOMC meeting is on the 15th, I believe, 15th of December. And then at that point, the market, the dollar, the currencies, they're going to need to see real action. And I think there's going to be a lot of pressure on the Fed to not taper ahead of Christmas. So the probably where the intermediate decline is going to last into that FOMC meeting in December. And then at that point, the market's going to call the Fed's bluff, and they will have to actually taper. And then that's where we get our intermediate cycle low, and get another rally, and possibly one that breaks above this high. So let me widen the chart. All right. As most of you know, I think we had a secular bull market top back here. Let me widen just a bit more. All right, so I think this was a secular bull market top, and then I think we started a bear market. And so this was a 3-year cycle low. You can see that this 3-year cycle did not make a higher high. Now we're kind of stuck in a range because this 3-year cycle low did not make a lower low, but I think the next one is going to. So I suspect when the Fed does start to taper, like I said, I think the market's going to call their bluff. I think they will actually have to act in December, and I think that gives us a rally that could potentially take price back up to this 50% retracement of this entire 3-year cycle. And we get our, but then I think this 3-year cycle is going to top, probably in early 22. So this is why I'm not terribly over the top bullish on metals just yet. I think as the dollar rallies out of this 3-year cycle low, that gold is moving down into its 8-year cycle low. I think it's probably going to shorten a little bit. I don't think it's going to last the full 8 years. I think it's going to top in 2022 when the dollar tops. So now let me move to gold. All right. So here's the gold chart. We've got our intermediate cycle low right here. We've got a daily cycle low right here. So we're in the second daily cycle. In theory, gold should probably rally into that December FOMC meeting, but I think we're going to have a lot of attacks on the metals, and I have my doubts as to whether or not gold will be able to make a higher high above this intermediate cycle high. You can see we're already starting to get a bit of an attack today, this morning. The cartel would like to keep gold suppressed underneath this 200-day moving average. They're probably not going to succeed. With the dollar moving down, then gold is going to have an opportunity to rally into that FOMC meeting on the 3rd of November. So I think this daily cycle has potential up to that point, but I think the cartel will probably fight this the whole way. Probably going to get to this resistance level at about 1830. I think the cartel will fight very hard to prevent gold from getting above this. And then as the dollar rallies out of that daily cycle low, that's an opportunity to beat gold back down. And then perhaps gold can break through this resistance as the dollar drops into that December FOMC meeting. So I just think this is going to continue to be pretty difficult, but I think gold is in the advancing phase of its second daily cycle, probably will be until the FOMC meeting on the 3rd of November. Don't know that it's going to be able to get above this resistance zone. I think there will be lots of attacks to prevent that. And then probably another dip down as the dollar rallies out of that daily cycle low. And then we get a better chance of a rally as the dollar completes its intermediate degree correction, something that could break through this resistance, get everyone really bullish, but then probably come up short of making a higher high here and trapping the gold bugs. So more or less, I think we're going to stay stuck in this range right here that gold has been in. It's kind of been in this range since back in the spring, and I suspect we're going to stay stuck in that range. And then if the dollar does rally and make it back to that 50% retracement into the spring, then gold, that's probably where gold's going to have its next intermediate decline, and it's probably going to come down and test this again. And I would imagine we'll get some kind of break of this lower support zone, but I don't think it's going to be a huge break. I don't think we're going to collapse and come all the way down to 1200 or 1100 or anything like that. It may just be a marginal break, 1650, 1600, and then at that point I think we get our 8-year cycle low, and then that's the point where I think we're off to the races. All right, here's the larger chart. So At that point, I think this handle to this cup and handle pattern is complete. That would be the 8-year cycle low, and then at that point, I think we're gold is going to give us a bubble eventually during this next 8-year cycle, and I think the rally will be much bigger than this rally right here. Um, I think 5,000 is probably a minimum target, and I think there's a decent chance that gold could even make it to 10,000 during a really extreme dollar crisis, which I think we'll have later in this decade. So for right now, I continue to be bullish on silver. We had this false breakdown. I called attention to this at the time and said this was an opportunity for pretty strong move, but I doubt that it's going to make new highs here. I kind of doubt that it's going to go above this intermediate high, but it could definitely between now and mid-December uh, take silver back up to somewhere even between 26 and 28. Get uh, get bulls, over the top bullish. We've already got analysts calling to the moon. They always do this. The vast majority of analysts are all calling for stock market crashes at intermediate bottoms, which we just got in stocks, and they're all calling for to the moon in the metals um, perpetually. These are perma bears, perma bulls in metals, perma bears in stocks, and they're always going to have these kind of calls, and basically they never play out. Um, at some point, the stock market will give us a bear market and a secular bear market, one that lasts for a decade or more. But um, I just don't think it's going to happen before we get a bubble phase. And at some point, the metals are going to take off and into that next leg of their long-term bull market and give us a bubble phase. But we have to finish this 8-year cycle low first. So, a lot of people listen to these analysts, but they're always wrong. They're going to be wrong again. I don't think we're ready to go to the moon in the metals just yet, and we are most definitely not ready to crash in the stock market just yet.